Whew! It has been crazy out there these last few weeks, with inflation at an all-time high, the economy headed towards a recession, and stock and crypto markets coming to a crash. A lot of people have been reaching out to me lately asking me if this is a good time to buy because the prices are so low and you can get everything at a discount. The short answer is yes. Yes, this is a great opportunity to buy and a great opportunity to invest. But there are some risks that I want you to be aware of before you do go ahead and invest, and that's what I'm going to go over in this video. Now, the first thing you need to know is, yes, this is a great opportunity to buy the dip because you're getting everything at a discounted price. However, know that the Fed is still planning on increasing interest rates this month in June by 0.5% and again in July by another 0.5%. As we witnessed a few weeks ago, when the Fed announced its biggest interest rate hike in 2 decades, this wreaked havoc on the stock market. The Dow fell by 3.1%, NASDAQ was down 5%, and Bitcoin and Ethereum went through what felt like a free fall, and they were down by almost 20%. That is wild. So just be aware that interest rates are going to be increasing 2 more times this year. Which leads me to point number 2 that you should be aware of, and that is that there is a high possibility that the market is going to dip more and it's going to crash more. And again, that's because the Fed is going to be increasing the interest rates 2 more times, and because of that, the prices could dip more. So yes, you can invest in stocks and crypto right now, but one, if you're trying to make a quick buck, if you're trying to make short-term money, quick money, that's not gonna happen. Chances are if you invest right now, you will be losing money, but only in the short term. Only invest right now if you have a long-term investing mindset. And by long-term, I mean like a few years. Because I'm telling you, if you invest money right now, there's a high possibility that you will be losing money in the short run. And then you're probably gonna wanna panic sell at a loss. And 2, if you do plan to invest right now, I wouldn't throw all your money into it. A good strategy would be to dollar cost average over the next couple months, so that way you're getting the best price. Or just wait it out a bit and see what happens after July. Now, for those of you who are unfamiliar with this concept of dollar cost averaging, it's basically an investing strategy where you decide that you're going to invest a certain amount of money periodically. And this could be anything. You decide your own schedule. An example would be that you decide to invest $50 in the stock market every single week, once a week. Or another example would be that you decide to invest $100 into the stock market every other week. It's literally any amount of money that you want to invest along with whenever you want to. And most brokerages allow you to do this automatically. So you can set everything up on the front end, and then it will just, brokerage will withdraw money from your account and invest it into whatever you selected, whenever you selected. So it's very hands off. You don't even have to think about it. And you are continuously buying at different prices. So that way your average cost is going to be somewhere in the middle. This is called dollar cost averaging. The third thing that you should be aware of when investing right now, and just investing in general, is that investing in individual stocks can get risky. And this is because companies can go bankrupt, companies can fail, one negative media article and the stock price can tank. That's why one of the best strategies, in my opinion, is instead of investing in individual stocks, is to invest in ETFs. ETFs stand for exchange traded funds, and they are basically bundles of stocks. So for example, instead of buying a bunch of Keurig stock, just buy the Vanguard Consumer Staples ETF, which contains a bunch of Keurig stock plus a bunch of other consumer staples, just like the name suggests, such as Spectrum, Rite Aid, Honest, you name it. You may be wondering, well, what's the point of an ETF? Why would I do that instead of just getting one individual stock from one company? And the point is because investing in an ETF is way less risky. As I mentioned earlier, Keurig could go bankrupt tomorrow. It could decide that it's not doing well, it's gonna lay off all its people, and that's it. They're done. They're underwater. That means you'll lose all your money that you invested. But the chances of Keurig, Spectrum, Rite Aid, Honest, and 90 other companies going under is very slim. That's why if you buy an ETF, which has a bunch of stocks from different companies in it, you will cut your losses. Even if one goes down under, the others will kind of pull you back up and will help cut your losses. Now, you know the concept of ETFs, but you don't know which ones to invest in. And that's the most important part here. And in this video over here, I go over exactly which ETFs you can invest in, especially with the potential of an upcoming recession. And if you don't see that video yet, then make sure you go ahead and hit that subscribe button so that way you're notified when that video is uploaded over the next few days. I'll catch you in the next video.